Good morning, everybody. This is Andrew Ross Sorkin, the founder of DealBook, and thank you all for joining us again on this week's edition of the DealBook Helpline, where we try to navigate this pandemic for businesses, entrepreneurs, startups, and really try to answer your questions. This is really about trying to get some practical hands-on advice about what everybody's going through, and hopefully we can learn from each other as we discuss all of it. It's a privilege to have Jason Carrion with me, DealBook's editor. He was with us on our last call and is on so many of these calls. And to have Gene Marks back with us as well, small business expert, the Marks Group. He has just a font of information and he's in the trenches living this like so many of you, and hopefully has even more information this week to share with you about what he's learning on the ground. And then we're really thrilled to have joined with us Stacy Cowley as the business reporter for the New York Times, who's been covering all of this from the start. This is what she does every single day. She's been at the forefront of reporting on all of these issues, and there's so much news that's coming out literally by the minute, even in the past 24 to 48 hours, including this morning. There's been more news on some of the government programs meant to help small business owners. And so I'm going to really turn it over to Stacy before we even begin our back and forth of answering your questions, to just give us the latest update on where things stand. Good morning to you, Stacy.
Hi there. Thanks to everyone for being here today. Yeah, so yesterday was the first day of round 2 of the Paycheck Protection program, and as people probably saw, it did not go well. The banks were having a horrendous time trying to get applications submitted, and there's still a ton of confusion in the banking sector about which applications are approved, which ones aren't, how soon they're going to be able to get their applications through, all of that. The feedback I've gotten is that it started to improve a little bit overnight, but it's still working very sporadically. So the systems are nowhere near normal yet. And then, of course, the other thing that happened this morning was that Secretary Mnuchin made some remarks about their intent to look pretty closely at the loans of over $2 million that were made through the Paycheck program, and to potentially audit those loans to see if they consider the companies receiving them to be compliant with the rules. I'm sure that's going to spark some anxiety among business owners, because one of the challenges of this program all along has been that the rules are really nebulous and changing on the fly every day.
So maybe we should start there and actually bring Gene right into this, because Gene, where we left off our conversation just 2 weeks ago was actually about the morality of taking these loans and also the potential for disclosure and what could happen going forward. We've now seen a lot of companies, big companies, mostly publicly traded companies and others, but also Nathan's Hot Dogs and the Lakers giving the money back. And so if you're a small business owner, how should you think about the potential for these audits and whether you actually want to try to get access to these loans?
Andrew, and Jason, thanks for having me on, and Stacy, I'm glad you're involved as well in this conversation. If you're a small business owner and you're applying for a Paycheck Protection loan, because that's the program that we're talking about right now, and you have been impacted or expect to be impacted by the COVID-19 pandemic, then you have every right to apply for the loan. I think what a lot of people kind of forget about that is that this program itself was introduced to help small businesses, and those are businesses with less than 500 employees, to cover their payroll. I mean, that's really the essence of the program. And Marco Rubio, who was one of the people that designed this program, has been adamant again and again that small businesses themselves, if you need help covering your payroll, and yes, some additional expenses like rent and utilities, but primarily to keep people employed and keep people off of unemployment, then you are abiding by the basic principles of what the Paycheck Protection Program is supposed to be. Unfortunately, the guidelines have been less than specific. So a lot of those decisions have been left up to the banks to kind of implement them. And I think that's where a lot of these things have gotten muddled.
But let me ask you, look, there's a lot of people out there who really, really, really need the money just to get by. There are others who may, quote unquote, need the money, and that may be debatable.
Right.
We could have a genuine debate about whether the LA Lakers need the money, and actually the perverse outcome may very well be that many of those employees remain furloughed. They may have technically constituted a small business, if you will, that is genuinely impacted, and yet because of their background and the celebrity that comes along with it, there is a little bit of picking the winners and the losers here. So how should you think about that, depending on what kind of bank account you have as an owner of a business?
Well, first of all, there's a moral compass that's involved here, Andrew. I mean, there are companies, Danny Meyer, for example, of his restaurant group, and Shake Shack, as well as the LA Lakers, that they clearly had other forms of capital, but their idea was, hey, if this money's available to us, we're just going to grab it, despite the fact that there are so many small business owners out there, mom and pop restaurants, small businesses, small stores that really needed it a lot more. And, for the most part, they're able to do that until just this past week. The Treasury literally had to come up with an announcement saying that if you're a company of a certain size, or if you're a publicly held company that has access to other capital, we're going to be watching you very closely. And it's just a shame that the government actually has to do that. If you're a business owner, though, you are allowed to borrow up to $10 million under this program. And if you've got the payroll, that you're under 500 employees, and if you have been impacted by the pandemic, as so many companies, and gosh, Andrew, all around me, there are businesses that have been shut down in the city of Philadelphia, where I live. They can't operate. They need to do something to sustain their workforce. Those are the people who the loans are intended for. The LA Lakers have other sources of capitals. So does Shake Shack and Potbelly and a lot of the other companies that sort of took. And unfortunately, part of the problem, in my opinion, is the bankers, the large bankers, who looked at these larger clients and advised them to go after this money and help them to.
I wanted to ask you about that, because you wrote a piece that I read last night in the Hill, and everyone, if you have an opportunity to read it, it's fascinating. It's a fascinating column where you effectively blame the bankers. Instead, you're not naming and shaming the companies, if you will. You're naming and shaming, or want to name and shame, the bankers who made these loans. This morning, I did an interview with Stephen Mnuchin, our Treasury Secretary. He said, you can't blame the bankers. He said, and you can't even blame the rules. He said, look, everybody was moving just so very, very fast, and they all were following rules, which may obviously have been now rewritten as we get into these second and third rounds of PPP. What do you say to that?
I can say that Secretary Mnuchin is being very diplomatic, and I think he has reasons for doing that. I think the Treasury, the Federal Reserve, I think the Senate Small Business Committee, they've done a great job of getting this funding out there. A lot of it did rest on the shoulders of the banking community to get this job done. They knew they were getting this with fewer guidelines than they needed. And, Andrew, a lot of smaller banks, I'm pointing the finger at big banks. I mean, on my Twitter feed, the business owners that I talk to, I have countless success stories of business owners working with smaller community banks and independent banks that succeeded in getting the loans through all of this. They managed to find a way. They weren't as particular with the rules, and they gave attention to even those business owners that were looking for 10 grand or 20 grand. And there are now allegations that I'm sure will be proven true in the months to come, that a lot of these big banks got their larger private clients involved because there were just bigger fees involved for them. And I think they did that at the expense of a lot of business owners that really needed the money. I do blame the banks.
I think we should probably just kick wide open the door of questions that is coming in. I should also mention to everybody that you can continue. We've had a lot of questions come in already, but you can do so in your Zoom window as we speak. And I should have also probably mentioned at the outset, this is an audio only call. So if you happen to be looking for video, it's not there. It's just us in your ears. But please do continue to ask as many questions as you can. And Jason, should we start with the first?
Yes. Yeah, let's do it. So I want to follow up on that on the banking bit. We have a question in here from Michael, who says that his lender, he's had a relationship with the bank for over 20 years, but it's not accepting new applications for the PPP at this time. Is it possible for me to apply with a new lender who I don't have an existing relationship with?
Is that question
Yeah, I
for
can
me?
jump in and take that
Yeah,
one.
Go ahead, Stacy.
Or Jean, go for it.
Yeah.
No, you go, Stacy.
Oh, I was just going to say, I mean, the answer is yes. You can apply through any lender that's taking applications. And if the lender is willing to take a customer with whom they don't have a previous relationship, which many of the smaller banks and the FinTechs are, you're welcome to apply. The only trick is that you need to make sure that the previous lender hasn't actually transmitted your application to the SBA for an approval number. What we found out in some cases is that the banks transmitted those things and essentially put a claim on the customer. Once the SBA has issued a loan number attached to your taxpayer ID or social security number, you're kind of blocked off.
Right.
So as long as your previous lender hasn't sent the application to the SBA, yes, go apply elsewhere.
Yeah, I can add to Stacy's 100% correct. And I do have clients and people that have applied multiple places, and it's sort of a race to see who gets that loan number, the E-Trans number from the SBA first, and then it blocks everybody else out. But some banks, though, just be careful when you're applying. Some banks in the application process ask you if you have applied to other lenders. And for some banks, although again, this is at their discretion, they're saying, well, if you've applied elsewhere, we're not going to accept your application. You certainly can't rely on the loan application. So you have to give full disclosure there. But what Stacy said is absolutely right. Go for it.
Yeah, and just to follow up on that, there was some chat 2 weeks ago on our first helpline call about FinTech companies and these new, neobanks or whatever you want to call them that are seeing this as an opportunity to get new customers who they perhaps don't have many, but they. I remember, Jean, you mentioned that they were a good route to go down. Have you seen over the past 2 weeks that they've made hay there? Are they?
Yeah, in a big way. In a big way.
Okay.
I mean, some of the ones just to mention, there's a few of them that are doing this, but On Deck Capital, Cabbage, QuickBooks Capital, PayPal, Square. There's some other ones. These guys are succeeding. I mean, we've been redirecting clients and people asking to those online providers. And the reason why we found that is a lot of these FinTech companies they're just better positioned to handle the volume and the online application process. It's more user friendly. This is what they do for a living anyway. And in fact, a lot of clients tell me, they go to even their regional bank, as helpful as they've been, they're just not as tech savvy or up to speed on the technology. Even some of the bigger banks they don't do that great a job. But these FinTech companies, they are stepping up. And I got news for you guys. They're smart because these FinTech companies, controversial as they can be sometimes, they do provide short-term financing to small businesses. And I speak to many of the executives there, and I've spoken to quite a few. They all view this as an opportunity for them. Like, let me help you with it. Let me show you how good we are at helping you get this loan, because maybe in the future we can continue to work together. And unfortunately, some of the larger banks haven't taken that same position with small businesses.
Yeah. Stacy, are there any particular patterns that you've identified in your reporting? You mentioned the smaller community banks maybe having more success before, but you've been talking to a lot of borrowers and lenders.
Yeah, absolutely. The smaller banks if you have an option, go with the smaller lender,
Okay.
Both because they tend to have the bandwidth to do this, and also there's some structural reasons right now. One of the concerns that's about to hit is the SBA on the second round here is limiting how many applications they'll process per hour for each lender. And it's pretty clear that the larger lenders, particularly Chase and Bank of America, are potentially going to have some issues there. They're going to be, they've got hundreds of thousands of applications to turn through, and the SBA is not going to get to them all. The smaller lenders have a much better shot at having their entire queues dealt with.
Yeah, good point. Questions here, I'm going to combine them from Joylyn and Michael. Joylyn asks, do you know of resources available to small businesses owned by women and or people of color? And Michael, what's kind of a related one, how bad will the disparity of funding for small minority-owned businesses be? There's kind of, let's say, gender or racial component to this. There's been a fair few stories about the discrepancies there.
Yeah, it's definitely been an issue. There's been a lot of discussion on Capitol Hill about doing additional set-asides or carve-outs for small businesses owned by women, minorities, in disadvantaged areas, things like that. None of it's really come to fruition yet that I've seen. The only thing that's really happened is that in this current round of PPP, they've set aside $60 billion for loans through community lenders and smaller banks. The intention there was to get that money to the underserved business community. Whether that's going to pan out, we'll still need to see.
Stacy, can I ask, because you've been talking to a lot of people as well as I mean, have you seen that out in the field that women business owners or business owners of color or minorities feel that they're not getting the loan because of the fact that they're a minority?
Well, it's a structural thing.
You,
it was
Stacey.
happening a lot
Sorry.
more in round one in that people were being told, yes, oh, sorry. It's a structural issue more than an overt issue. What we found in round one was that a lot of business owners were being told things like, Bank of America saying, okay, we're only going to make a loan to you if you have an existing credit line. Well, minority business owners were a whole lot less likely to have that with one of the larger banks than other business owners. So it's not so much that, people are making overt discriminatory decisions. It's just that structurally it's baked into how this system operates.
Yeah, that's a great answer.
Yeah. Manuel asks, maybe this one's for Eugene. I'm an independent contractor and don't have payroll per se. What do I submit to the banks?
So if you're an independent contractor, you actually have a couple of options. One of the easiest things might be to do, assuming that you've got a lot of patients and a big bottle of Jack Daniels, is you could apply for unemployment in your state, because all the states are required to provide unemployment insurance, plus the federal benefit, the extra $600 a week through the end of July for independent contractors and freelancers and even sole proprietors. What we're finding is that a lot of the state systems are woefully behind, both technically and from an education standpoint. And I've had some clients had to apply a few times, get turned down because they were an independent contractor, and then apply again until they were able to reach somebody that actually understood the rules and were able to help them through the process. And when that's the case, the state will ask for 1099s, any document that your tax returns, perhaps from the past 12 months, any banking information that might show deposits that are coming in. But the states themselves might be the easiest way for you to go to get your money through unemployment. You can also get it through the Paycheck Protection Program, but you've got to choose between one or the other. And if you go to the Paycheck Protection Program, you apply for it, you would get a loan. The loan would be based on any income that you made in the past 12 months that would be subject to self-employment tax. So when you look at your tax return, you'll see on your Schedule C that you file for your other income that shows what's been taxable. That's payroll as far as the Paycheck Protection Program is concerned. And you can use that money to see if there's a loan available for you and then hopefully get that forgiven. But again, you're going to have to go through a bank, and there may be more questions, and it may take a little bit of a longer time. And that's just for 8 weeks as opposed to unemployment, which can take you through the end of July. So those two avenues should be looked at and then compared to each other so that you can decide where am I going to be best off at the end of the day. I hope that helps.
Yeah. Another kind of special case here from Deepa, who says that in 2019, their company spent a lot of money incorporating tech investments, and they launched this year but had to stop operations due to coronavirus. There are 3 founders and we did not take a paycheck. Is it possible for us to apply for PPP? These kind of like pre-revenue startups that are probably all paid in equity and this kind of thing.
Would you like me to answer that?
This is Stacy. You go for it, Gene. You know this better than I do.
I'm not so sure, but I'll give it a try. First of all, it's not easy. If you did start up a business before February 15th, 2020, you are allowed to apply for the Paycheck Protection Program. You have to substantiate what your payroll was over the preceding 12 months. Even if you didn't take a paycheck, if you took distributions or cash out of the business, when you did your tax returns for 2019, or even if you haven't filed them, if you have the documentation for the tax returns, this gets back to self-employment income. Whatever money that you took out of the business, some of that portion of it is going to be considered to be income and subject to employment taxes. That again is your payroll. So even though you didn't get a paycheck per se, you would use that income subject to self-employment taxes to figure out what your payroll is for purposes of calculating, your loan, the potential loan that you can get under the Paycheck Protection Program. But one thing just I do want to note as well is that in the end, guys, this is still going to be a deal between you and your financial lender, whether it's a big bank or a community bank or even one of the online lenders. You're going to have to sign off on a promissory note with them. So, the lenders, although there are guidelines, some of them decisions are being left up to the lenders from a compliance standpoint. And some of the better bankers that I've met, they're working with their clients. They're saying, okay, you've got an unusual situation. Let's figure out what could be the supporting documentation that would be acceptable to us, your banker, so we can submit this application to the SBA. So if you feel like you're in an unusual situation like that, or not sure what documentation to use, you got to pick up the phone and talk to your lender, and the good ones will work with you on that.
Right. There are kind of two related questions here. Maybe let's start with you on this one, Stacy, based on your reporting. So Drogoff asks, or comments really, that they received a loan, but the business is based in New York City. I'm worried after 8 weeks we won't have any work for employees and I will have to lay them all off then. Is it possible, do you think, that the forgiveness program will be extended? And there's a similar one from Randy talking about his deal in California, that he got these loans, but he's worried about the timeline when it comes to reopening.
Yeah, that's an excellent question. And that's been a real vexing point that I think is just starting to get more attention, is that many of the hardest hit businesses, the retailers, the restaurant owners, things like that, are in the worst position for these loans in a lot of ways, because nobody really thinks in 8 weeks everything's going to be completely back to normal. So they have the hardest choices here about, do you bring back employees that you potentially do have to lay off again? In terms of will this be extended, that's a tricky political question. The way the program was written originally, it says you can only have one of these loans. Obviously, if things are still in a real mess 6-8 weeks from now, there's going to be a lot of pressure to potentially let some of the hardest hit businesses extend these loans. But a lot of money's already gone out the door on this program. It's tricky to get more approved. They're starting to feel like there's some reluctance to put more into this program that's struggled so much. So I won't be surprised if this is it. And if in 8 weeks, business owners are just stuck with that decision about, hey, we told you to bring all these people back, now go lay them off again. And that's a really rotten position to be putting a lot of business owners in. And so for a lot of people, the decision to accept this money is not straightforward.
Can I follow up and actually make it marginally more complicated? I've talked to a number of business owners who are in states that are either quote unquote reopening now or intending to quote reopen in the next several weeks. And some of them are saying, especially these are in the retail and restaurant space, saying, I don't even know if I should give it a go, because I know by default that if I have to, if we're going to have to do social distancing measures where only 25 to 50% of customers are even allowed in the door for the next 2 or 3 months, the economics of it don't even make sense. To, the idea of reopening, we may be reopening America, but we can't reopen the store because we're actually lose more money being open than we will closed. And what you tell that person?
Well, I can take this one. And when you're saying, Andrew, about giving it a go, are you saying that the business owner is just saying I should just throw in my chips and close up shop?
Well, I've heard some business owners say I should just close up shop. Other business owners say that I should just stay closed. It's actually cheaper for me to stay closed than to stay open. And others say I should maybe try as a bridge in hopes that somehow in the next 2 months, something happens where I'm not required to do the social distancing. And therefore then my business could work. And maybe then I can keep my customers by doing that. And if I'm not open, maybe I'll lose those customers to some other place. But I think nobody's thinking, at least right now, that social distancing requirements are going to change so meaningfully. It's not like a vaccine is coming in the next month or two, in terms of how they should think about it then.
So I have a couple thoughts on that, if I can. I mean, this comes down to how well you know your numbers, Andrew. I mean, this is if you're, right now, again, a lot of businesses haven't reopened yet. Business owners are at home. They've got some time to think this through. There's no question that when things reopen, it's not going to be exactly the same. And there's no question we don't know how long this is going to last for. What we've got to understand is what our overhead is to run our shop or our restaurant or our business if we are going to open. And we also have to understand, once we've figured out and we know what the bottom line overhead will be, what type of revenue or customers can we expect, so we can at least keep ourselves going. Because I do think if you're in it for the long run, it's going to be important to get back to work and grow, do it over time. But you can't do that if you don't know what your numbers are going to be, and if you're going to open up shop and the revenues aren't going to be there. So you have to figure out what your overhead is, and then you have to make a value call, a judgment. If this is what my overhead is, I believe that even in these social distancing times, I can at least bring in a certain amount of revenue that can cover my overhead, see me through, and then start that as the basis for growing my business. So that's comment number one. Comment number two has to do with bankruptcy. There are a lot of companies that are going to be declaring bankruptcy over the next couple of months. It's inevitable. And just coincidentally, the government just had a new law that favors small businesses that are choosing to go bankrupt. It went effective in February. It's called the Small Business Reorganization Act. And it lowers the bar. It makes the bureaucracy a lot less, the paperwork a lot less. And I have some clients that are seriously considering filing Chapter 11, a reorganization, because it's not only easier, but it will give them some breathing space where they can renegotiate their debts. They can take a little bit time before they decide to reopen, and then come back and reemerge with a plan to come out of bankruptcy and then grow their businesses. Obviously, there's a lot of pros and cons. There's significant negative side to doing that, but it's certainly an option that I think you also have to consider.
I have another question. It actually came in to me separately this morning, slightly off topic, but brings us maybe back to the conversation we started at, which was about how these things are going to be audited and how certain people should think about taking these loans. A plastic surgeon in Beverly Hills who has a net worth of over $50 million and owns a Bentley, has a staff of 12 people. Is he eligible to take the loan or not?
Stacy?
I mean, again, it probably depends on, it probably depends. A fair part of the problem with this is that it's very subjective. Some of that probably depends on, what his sales numbers look like. If all of his clients have had to cancel their appointments and there's no more revenue coming in the door, then potentially, yes, this really doesn't take into account, do you have other assets to fall back on? That said, given the political pressure, it's clear that, the administration is wanting to do more audits and look at these things more closely. And anyone who does have access to millions of dollars sitting in a bank account should probably think really, really hard about whether they feel comfortable certifying in good faith that they absolutely needed this loan.
I also, if I could just jump in, I mean, again, it gets back to moral compass. It gets back to some of these, some of the bigger change that took this money. If you have $50 million in the bank and you can see yourself through this, I mean, for goodness sake, guys, we have medical workers and firefighters and grocery store clerks that are literally risking their lives every day through this. I think really ethically, if you don't need the money, you can pay for it out of your pocket because you know that it's going to be used by some other business owner that really needs it a lot more. Do you really need the government to tell you that that's not the right thing to do, that you're scared of an audit? So to me, that's what it comes down to.
This person has currently furloughed its people.
So
a doctor, because clearly these are elective surgeries and nobody is able to do elective surgeries at the moment. I'm not defending the position. It's an interesting one because it's clearly a small business. It's an individual who is of means. They're a plastic surgeon. But it's interesting and complicated. And in a world where part of the purpose of the PPP is to keep people employed and paid rather than unemployment insurance, right? It's a version of unemployment, right? There's two things going on. You're either getting the money through the company, meaning funneled the government into the company to employee, or ostensibly the employee is getting unemployment insurance.
Yeah, I mean, let's do the math here, right? I mean, you've got 12. How many employees does he have? 12?
I think it's 12.
I mean, if they're making 50 grand a year, I mean, you divide that by, months, it's about $50,000 a month in payroll expenses that the guy has. And you said he's got 50 million in the bank. I mean, really, are you going to take Paycheck Protection money from, the mom and pop restaurateur who doesn't have 50 million in the bank and really could use that money to pay for their people? Again, you're allowed to do it. I mean, it's unfortunately, that's the guidelines aren't tight enough to restrict people from doing that. But in these times, is that really the right thing to do? I guess I got to leave it up to the person.
Yeah. Let me jump in here with two questions that are related from Jody and Tammy, who both got PPP loans, and Jody also got an EIDL advance, but they're asking about how to spend it so that it's 100% forgiven. That there is a little bit of confusion there. Jody calls the rules murky about what they need to do with the money that they successfully received to make sure that they don't have to pay it back.
Yeah, this is actually, I'm working on an article about this right now. If anyone wants to talk with me for it, please reach out, because it's very murky, as business owners are understandably getting nervous about the lack of clarity around that rule. The one thing that's clear at this point is that the safest thing to spend your money on is payroll. That was the intention of the program. They want to see you paying workers with it. They're not really going to question that really hard. The current guidance out there is that at least 75% of the money must be spent on payroll if you want the money forgiven. The other 25% can be used for a small number of qualifying other expenses. It's defined as rent or lease on your space, mortgage interest on your space if you own it, or utilities. But like I said, they're telling people only 25% of your money can be used on that. We want to see you spending at least 75% on payroll. And if businesses are really nervous about getting things forgiven, spend it all on payroll. I mean, that's really the surest way to get this thing forgiven.
That's great advice. Just two other points on that. I mean, if you're not sure, the Treasury Department on their website, if you just go to the Treasury Department's homepage, there's a link there to go to the COVID-19 resources for businesses. They've issued, final rules on this program. And there is specific guidelines in there as to what expenses can be submitted for forgiveness. But Stacy's right. I mean, there's still some murkiness about that. Like I said earlier, again, this is going to be something between you and your bank or your financial lender. So before you even sign that promissory note, my recommendation is to go over the terms of forgiveness now. Don't wait. And just be in agreement with your lender, and hopefully it's another human being on the other line, that, what can be submitted for forgiveness, because the last thing you want to do is be in a situation in July where you're having a shouting match with your lender over what's acceptable for forgiveness or not.
And just to jump in on that, one of the challenges for both the business owners and the banks is that the Treasury's issued some clarification, but the banks are still really nervous about understanding themselves what qualifies for forgiveness. And one of the challenges for owners is a lot of those promissory notes are written very vaguely. It's kind of like, this forgiveness is subject to whatever your lender decides is real. And the banks right now don't have a lot of answers themselves about this. They're still waiting for those details. So I absolutely understand the trepidation people are having trying to comply with these still being written rules.
And so here a follow up from me, if I can. We're seeing these big listed companies return the money. There's this May 7th deadline to return, a PPP loan. If you think you don't need it, or you should have taken it out. If you're one of these other companies, if say 75%, spending 75% on your payroll means that it's a lot less than the loan you were actually able to get because for whatever reason when you were calculating it, should you be returning that money before that deadline?
If I could jump in there, just from a business standpoint, I would say no. And the reason why is because the worst case scenario is that whatever is not forgiven will remain outstanding as a loan, and a really, really low interest loan. It's a 1% annual interest rate loan. that's not due for 2 years, and you don't even have to make your first payment for another 6 months. So it really is very, very cheap financing for you. And, I would probably, keep the money. I would be, either paying back that loan or working at, having a plan for refinancing it in the future. Obviously, everybody's individual situation, may speak differently to that. But I would definitely consider the fact that you've got a very, very, very inexpensive loan that you can take advantage of during these times.
Right. And a relevant one here from Ryan, a question he's asking, it's slightly specific, but he's not able to get a straight answer on whether or not he needs to employ the same exact number of employees when the loan was taken out, or at the end of the 8-week period that it covers, or what. He runs a content company with lots of short-term project-based employees. And so I think what he's getting at is that his payroll, as it were, is kind of a movable feast. And so he's not sure what to do to satisfy those requirements. What do you think, Gene?
So the rules go for that the level of headcount and compensation that you had, I think it's between, and correct me on this, like February 15th through April 26th, somewhere around this time, that needs to be restored by June 30th. And that's headcount and compensation. There's a formula that's provided. If it doesn't have to be the same people, it could be a different employees, but it's got to be the same headcount of full-time employees and the payroll levels that you had before. If you don't restore it by June 30th, it doesn't mean that you're not going to get forgiveness. You're just not going to get all the forgiveness that you might be eligible for. So those are what the rules are. That's
yeah.
what we're gonna do. Does that make sense?
As Gene said, it does not need to be the same people. It's based on the number of positions, not the actual identity of the employees. But just to clarify that June 30th thing, because this has been an area of confusion for a lot of people as well. June 30th is the program end date, but
Right.
The current guidance from Treasury is that they're going to look at your headcount during the 8 weeks after your loan is dispersed, which for many people who are getting their loan money now is going to set their effective deadline for hiring everyone back well before June 30th. So that's another obstacle for business owners who've had to lay off staff. You pretty much need to bring them back right on or about the day the loan money is going to hit your bank account. And that's also a challenge for lots of people.
To say the least. Thanks everyone for all of your questions. These have been really detailed and great to see. We are just about out of time, so I'm going to pass it back to Andrew to wrap up this edition of the Helpline.
Thank you. And thank you, Jason, for so expertly navigating all of those questions and bringing them to Gene and Stacy, whose answers were really so practical and helpful. We just want to let everyone know on this call, we'll be doing this again, likely in about 2 weeks from now. A replay of this call will be available on the DealBook newsletter tomorrow morning. We'll also make it available on social and nytimes.com. I want to thank everybody for joining us and bringing us your questions. And also want to let you know that if you want to hear and see more Times events or find out more about them, you can go to timesevents.nytimes.com. In the meantime, we wish you all the luck in the world as you navigate all of this with your own businesses, and please stay safe and healthy out there. We'll talk to you very soon.